it be? I need.
Alright boys, looks like we might have to do this without the camera today. It's not playing nice with the new setup. I'm not sure if you guys saw that, what happened then when I tried to turn it on. It's all good though, we don't need that. Don't need that at all. All we need is our charts and we're good. Now, in terms of last time we spoke was last Thursday. Actually, I didn't stream on Friday, and yesterday I didn't remember last week that it was my wife's birthday. So yesterday I was off as well. Lucky I remembered that in time. That was a nice little clutch save for me. But we did get a little bit of a pullback in the dollar yen. Now we didn't get to the 116 level. This is a level that we're talking about buying at last week, and we got down to 116.50. Now, what does that mean, right? What does that mean as a trader? What should I take away from that? Well, definitely take away from that the buyers were in a hurry. Okay, the buyers were there on the support on the dip. They didn't wait for the big level to be tested. They came in early. As soon as we got a half decent reason to be buying, basically BOJ just not being hawkish at all, or just not being the risk event getting past us, they come straight back to buying dollar yen. Pretty much, probably going to test those highs at least. Maybe we're going to make a run to that 120 level now, but this was the opportunity, right? If you didn't get in, you sort of missed it. It would be surprising if the market now reversed and went down to 116. In fact, if it went down here at these levels like this, then it would actually probably, I wouldn't buy 116. I would buy next leg lower, because it would be strange price action. A little bit of a warning from the market, something's up, and not the sort of thing that you want to buy into. Okay, that's just, you don't buy the second sell-off. That's not what you get into. That's when the market's actually potentially going to turn. So dollar yen now is buy until it turns over, and then we don't have any reason at all to be bearish here. Now this is impacting most of the other pairs, right? Obviously anything which had been hoping for a dollar yen clean out to the downside was that if we got that clean out, you'd get a nice little reverse rally on, say, the euro or the Aussie or the pound. But everything's just grinding low against the US dollar, and you've got to respect that. And the euro itself right now, we came back up and tested sort of that breakdown level a few times, and the failure up there is pretty noticeable, and I suspect we're going substantially lower. It makes more sense to me that we're going to say 102 while the dollar yen goes to 120 in the remainder of the year. Okay, while the market doesn't seem to respond to any sort of outside event at the moment, whether it be the Turkish ambassador being the Russian ambassador in Turkey being assassinated, or China, US having a little spat, nothing is taking a hold just yet. So let the market get to those key levels. Let the Dow get to 20,000, like it seems to be wanting to do, and that would be the main way I'd be playing it here. Don't stand in the way of such natural trading. So definitely don't be looking to do any counter trend stuff just yet, unless you have a medium term outlook and you suspect that this is nearer to the end than the beginning. And I don't know why you would think that. If anything, the Dow doesn't have to stop at 20,000. It's just a number. It's not like the profit taking there will be overwhelming. We need a substantial reason. You need something that will change the outlook for the US monetary policy. Something that puts the 3 rate hikes into doubt. And we don't have that just yet. So, business as usual, buying US dollar. So, dollar, yen, euro, pound is behaving itself to the downside. Generally, if the dollar yen's going to rally, the pound will be better supported. So, a trade idea I like is to sell euro pound here. The pound's been underperforming a little bit. I do like the euro pound short. At the moment, though, my MT4 is updating. For some reason, there must have been an update in the last week, on the weekend. And it wants me to get my passwords out. I have not got time for that just yet. Looking up all my different passwords is a bit of a mission right now. And so euro pound short is the one the only other trade I'm in right now is short euro. So I'm in one trade short euro. I would be going short euro pound right now if I could access my account. Like, I just don't want to muck about trying to access it on the stream just here. Let's find it though, just so you can see. This is literally my watch list that I look at main times of the day. So I don't know if you can see this one here. These are the 20 things that I have up on my screen. And to make the 20 list is pretty important, right? I suspect I roll in and out certain different pairs, but right now these are the 20 that make it. Euro pound. So yeah, this is just trying to find a safe trade in the market right now. I like the euro pound short. So it had a bit of a relief rally. And that relief rally was reversed. No reason now that we don't go lower. And so basically you're just playing the two pairs here. You're saying to yourself, what is the euro going to do versus, euro USD versus the pound USD? And right now at these levels, it's easier to see the pound reverse than the euro. So the pound had that natural soft Brexit sort of support coming through. Now that can Emilio, refresh the page, you should see it. Get out of here. Get out of here. So yeah, we're talking about the euro versus the euro USD versus the pound USD, which the euro pound cross is the combination of. So both are in downtrends, both are trundling along, but the euro has broken that key little technical level, whereas the pound's just in no man's land. It might go lower. It probably is going to go lower, but there is a chance here of it outperforming the euro. So I don't mind the short euro pound. If the market takes any sort of guidance from, more soft Brexit headlines, then the uptrend that was in, the recovery trade, you'd put it as a more likely, that came back in was could easily come back at these levels. Now, I'm not going to be ultra aggressive in it. I do like the fact that pound yen probably going to be supported too. So the pound yen, while the dollar yen's rallying, while stocks are rallying, it does provide an additional support for the pound itself, especially when it gets aggressive there. Now the pound yen had a nice 300 or 400 point pullback, and that's another reason itself to be looking at the pound to outperform. Just generally, if you look at the correlations, euro pound goes down a lot of the time, dollar yen's rallying, and it's via the pound yen conduit, right? That's where that comes through. So yeah, that's one trade that I will do in the account soon, once I get access to it, maybe next hour. Yeah, you should be able to see everything here, just you can't see me, Emilio. Euro USD down to 102 in the next couple of weeks. Adoof. Then everyone's going to be talking about parity, right? I wouldn't be selling euro close to parity, that's for sure. At some point, there will be a substantial US dollar correction. There's no doubt in my mind. I suspect in January we'll have a 3 or 4% reversal against the US dollar at some point. There may not be a very long-term one. Okay, it might be only lasting 2 or 3 days, but I wouldn't be in the way of it, and I would be hoping that to actually, re-engage some trades after the event. I just personally don't enter the market when everything is, this late in a trend. This is not where this is a top side. This is the downside in this particular market, right? In fact, getting above 120 would be an effort, I suspect here. In the short term, short term. So sideways action and downside action is very likely soon. And then after that, we can use the nicer levels to enter. And I'm not talking 200-point pullbacks here. I'm talking 3 or 4, 500-point pullback. 120 to 115, 120 to 116 actually. I suspect we're going to get that. Same, some point if the Dow breaks 20,000, then whatever happens, a couple of days after that, you might get some sort of story that prompts the market pullback. Otherwise, literally, I'm not entering. I'm not entering this high. I'm not chasing the market like this. Alright, is the stream working okay there, guys? Renko? I mean, that's all. This is contingent on you having to trade in the next couple of weeks, right? Next couple of weeks is not necessary. This is probably the most widely taken time off in the market. The next couple of weeks, so that's why I'm not going to be pushing trades too much to you. And the next sort of move that we're hoping to get a part of is the US dollar correction, looking to buy the US dollar after that correction. Don't be a hero trying to look for that high. That's a mug's game. There was that terrible event in Berlin last night. Markets shrugged that off as well. Just going to look for a little bit of research here, see if there's anything out tonight. I mean, there's no data out at all. You got the New Zealand Global Dairy Index actually. Now that New Zealand dollar has been a little bit of a cheeky seller. Okay, this market is grinded low. Pretty relentlessly actually. In the last week, under the radar, we haven't been focusing on it. Me at work anyway, not traders aren't focusing on it. They're more focused on the Aussie. But we broke below 70, and it's likely now to be testing 67 in the coming weeks, and it has a fair bit of room left to reverse because it literally hasn't broken its uptrend yet. So it's been holding its own against the US dollar, a lot more than most pairs, and so that's why you have to assume that when it does break, that the stubborn longs who will still be in there from above 70, they have to be cleaned out still. So that's why I suspect 67 will come quicker than later. And then Aussie Kiwi, that could become a nice little trade given the right circumstances. But I'm not going to introduce you to that trade idea until we have a clear view. That's a counter trend trade. I'm trying to get some research for you here. It is not liking it for me. And it's likely now to be You're going to see a lot of these reports come out in the next couple of days, in the next week or so. 2017 predictions from the banks. Pretty much every one of Goldman Sachs in 2016 was wrong. They got stopped out on so many trades in the first 2 weeks, actually. They got stopped out like 3 trades. They put out the 8 trades. I haven't got it just yet, the 2017 one. But this is Credit Agricole, big French bank. We can look. It'll be good to see who, if we do it in the next week or so, do look at each of the bank's little views. It's good to see what they think is going to be the main idea. That way, if you see that develop, you can sort of play along, understanding where they're coming from. The analysts, when they write the reports, saying, "Oh, I know what the guy's talking about. We saw that in their yearly report." I mean, everything's focused on Trump and his stimulus plan, and how quickly the Fed's going to be raising rates, and whether inflation comes back because of oil. These things are, well, European political risk is something else, and protectionism really is, they're talking about US versus China trade war. And at some point, we're going to be talking about the tapering of the BOJ and ECB. ECB said they're going to taper from 80 billion down to 60 billion after March. That's fine, but maybe later on in the year you might get more taper talk, right? And that's a one-way street. That's a Euro rally sort of scenario. Market likes to front run that sort of reversal, but it's got to get past all those electoral risks, Dutch and French. So these guys think the euro is not going too much lower, and then talk about the ECB taper will help the euro recover in the second half of next year. They suspect BOJ policy divergence will continue between America and the US. Maybe the tapering of the BOJ's QE might lead to some reversals in the yen. Yeah, so they're suspecting that will happen the same time as the Euro USD rallies, which makes sense, right? Everything sort of moves against the US dollar together. It'd be hard for that to happen without it. Euro yen would have to surge. Possible, but definitely not the main way. Right, so this is the positioning of the market last week to this week. A little bit more. They stretched, and this has been growing higher and higher each week. The yen and the dollar can't get much worse, right? So this is another reason to be a little bit careful here. Everyone is in the trade, right? Everyone. Very few people are not in that trade. Eventually, you're the last fool to buy. This is substantially bigger than the other US presidential election rallies. And what this is showing you is the yield on the 10 years, on the 2 years. Percentages that have moved. Wait, that's a very funny chart. I struggle to read that one. I'll let that one go. I'll come back to that myself later. It's like a percentage thing. I think it's just looking at general changes. There's definitely not enough information here. Talking about the percentage moves, I suspect. What? Yeah, no. So as a whole, the US dollar actually hasn't finished that high compared to other years. Right, so if you're looking at what's going on here, this is if you're looking at the year on year, it hasn't moved that much, and this is just where the TWI is. Um, yeah, definitely you wouldn't say that the US dollar's overbought, like long term near its highs. Euro went down to below parity to 80 on its first little dip post float. Dollar yen's coming, from has been in a downtrend for literally decades, and it's it could easily get to 150. Then the US dollar's overbought. In fact, if you want to just keep an eye on something which is easier to look at, if the Aussie dollar is close to 60 or below, then the US dollar's nearest levels, right? That's when that's the sort of top end of the US dollar range. So it's still got another 10% easy. 10 to 15% it could rally this next year. Alright, so keep in mind this historic evidence suggests the safe haven currencies such as the yen and the euro outperformed during US-led trade conflicts in the past. Alright, but the one which is going to get hit the most is going to be the Aussie dollar, and that's mostly to do with the Aussie being used as a China proxy in this particular case. But just generally, when stocks fall, then you are going to see the Aussie fall. So a lot of people are talking about Aussie US lower next year. And the difference in this sort of US led war is that China's in a much stronger place in to have a bit of a trade war. So they might not back down as quickly as previously. It could be a bit more interesting, right? How it plays out. I alluded a fair bit in the last couple of months to the European political risks in 2017. This is the exact dates. So the key ones are the French presidential elections. The UK trigger is pretty important. Dutch is pretty important, but they're not really likely to get an ultra right in. It's the French one which people are focusing on. But there has been some crazy results in global politics, right? So let's not ignore that. And it does look like Le Pen is losing ground against Fillon. Right, so if there is a hard Brexit, there can be bigger falls in the pound. At the moment, though, soft Brexit seems to be the main game. If hard Brexit comes back into the game, then you could see the pound go back, below 120, testing, looking like it might head to that 110 level. 110 is a key level in the hard Brexit level game, if that happens. But I don't think that's going to be the likely path. Too many collateral damage there. Too many people self-interested are going to keep it being nice, I believe. And then if inflation makes its return in 2017, it hasn't been around for 5 to 10 years, then they suspect it's going to be led by oil rallying, right? So the return of oil, energy costs are going to come through, and that pushes through the rest of the market. Now that's something that we is a big conjecture, right? A big part of a lot of analysts' playbook is that inflation's coming back, and coming back big time. In that scenario, the Fed does raise 3 times, and I don't think the Fed's going to raise 3 times. I suspect there'll be some volatility in the market, and the Fed will back off, be dovish again. But if inflation comes back, then it ties their hands up a little bit, makes it harder for them not to react. Certain inflation-led central banks like UK and Australia could also get some nice rallies on the back of that. Not bad, not bad. That's enough from Credit Agricole. We see their game. We see what they're trying to do. See what they suspect is going to happen. Might have a look at one bank per day. All right, that'll be something we do for the rest of 2017. See what their thoughts are. Usually they're quite good reports. Just quickly, we'll do some technicals on the dailies for the FX. What they're talking about here is the Deutschmark, not the euro. It's a nice little trend line, isn't it? I suspect we're going to get to 120 though. Alright, Aussie. I want to look at the euro pound actually. Alright, so we'll finish with the euro pound here. Downside targets 81.70. Yeah, be careful here. Make sure you have your stop pretty close on this short euro pound. This is not the one that you want to be wrong and adding to, because there is scenarios where we do go back straight up to 87, 88, even 90 if it is a hard Brexit. And you don't want to just be caught in some sort of euro pound collapse again, just because you have a stubborn view about the market, right? So euro pound is a nice little sell, I think, but it's just make sure that you got your stops pretty close. You don't want to be in the market if it's back above 85. Alright guys, I'm getting a new computer. I'll be back on stream with my camera. Hopefully it's a little bit cleaner as well. next couple of days. I will be back tomorrow at 9 GMT. Keep an eye on the Dow tonight. See if we're going to make that run for 20,000. Any sort of sharp reversals up here are worth paying attention to. Dollar yen seems to be making its move to the its relief, its pullback seems to be done. So suspect we're going higher there on the dollar yen again. Euro and pound are grinding lower, so no reason to fight that just yet. Alright guys, good luck. Trade safe.